Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Monday, May 21st. This week we had a number of fundamental pieces of information that came out, a lot of which I discussed in the advanced video, but here's one of the things that we did have, a core issue, and that was Europe. The concern that we have there, and it's also reflected in Friday's action. We can see here in the NASDAQ market, sellers continue to come into this market. In the mid caps, it also traded back through the sell level. And here would be the original buy level, and the difference between the sell level and the buy level here in that market is 54 points or $5,400 per contract. And it has not reached a magnitude objective, by the way, to the downside for that particular market. And again, I'm not suggesting that you should get that return or that you should be looking at these as buy and sell levels for yourself, but it does give you a reference in terms of how someone is looking at this market. Now let's move on and let's take a look at what happened with those currencies. In the euro, we have a straight line 3 and some buyers did come back into this market. Now, as I mentioned, either I mentioned it on this video or the advanced video, but we are getting low enough where we're seeing a loss of momentum. The issue here is who's causing that. And there's two possibilities. We're going to find out which one when it comes to this coming Monday, but I think Tuesday and Wednesday are going to be the important days for these currencies. In the Swissy, this market also, here is a sell level, the original sell level. This would be a buy level. It did trade through that buy level. That difference between the sell level and buy level in that market is 260 ticks, or $3,250. Now, it did not reach a magnitude objective to the upside, and it would have reached a risk parameter as this market backed off. So that buy on the first push would have created a loss. So I just want to give you that entire picture of that market. And when it comes to those currencies, I am looking for some follow through to the upside. The tricky part here is the sustainability of that action, and that is kind of doubtful. But right now we're looking for buyers to come back in. When it comes to the interest rate markets, again, capital flows away from the stock market. We can see it reflected here in the 10-year notes. Buyers are coming back in. I'm cautious about this action, though, as we go into next week, this coming week. Gold did give us some follow through. Same thing here for silver. And it's a reflection of the expected Fed action that could be coming down. And this is setting up as a potential inflation hedge. If we think about the energy markets, well, crude oil continues to move lower, but remember, we're at 22-year highs. Demand is down 5%. This is also very logical, and the dollar's, well, a little bit weaker, a little bit stronger, depending on what currency you're looking at. And natural gas continues its march. Basic fundamentals that are driving that market. And when it comes to the grains, this week we can see in wheat the concerns about weather, the impact that it's had. But, you know, again, for those of you who have been with me for the last few years, this is not unusual action and this time of year. So we're seeing some pretty healthy moves for that market. Well, and we're looking for a rest day today, on Monday. Well, that concludes today's market studies. Thank you for joining me. Looking forward to being with you again. And in the meantime,